Hi there, this is Jeff. Most investors looking at investing into the real estate market always wonder what market circles are we in. And so today we're going to look at what are the various market cycles we have. How would you identify a buyer's market, a seller's market, or a market you have to stay down or sit on your hands? Now, there are 4 market cycles in the real estate market. You have the recession phase, you have the expansion phase, you have the recovery phase, and you have the hyper supply phase. Among those 4 phases, 2 of those phases favor the buyers. And which are these? The first one is the recovery phase, and today we're going to focus primarily on the recovery phase. The recovery phase is identified or categorized by 1, prices stabilizing in the markets, 2, high vacancies. How do we mean? Let's expand on these few words. So high vacancies means because the recovery phase is following through a recession phase. Now, a recession means things have nosedived. People have less access to disposable income, or they have fewer jobs. Therefore, they don't have access to income. So in that phase, as it gravitates into the recovery phase, individuals who tend to avoid those properties. And what you see in the market is a lot of these people cannot afford to pay for those homes. And so landlords have inventory, but no one is taking those properties. So that leads to a high vacancies rate in the market. And once that data is out, it tells you that more and more people, while they have access to seeing prices stabilizing, they don't have disposable income to afford those properties. Hence, so you have a lot of inventories of rental income, rental properties just sitting down idle in the market. That's a recovery phase identification. Number 2, it's categorized by price stabilization. So by price stabilization, you see prices in the market, instead of prices just going up off the roof, prices are beginning to take a cue and stay stable over a period of time. That identifies or categorizes a buyer's market. So for a buyer, you want to look at opportunities. What are these opportunities for me to go in and to purchase these prices? What are the things you're looking out for? There are 3 key things we look out for when we're going to buying the property. Number 1 is the price itself. In every investment in real estate, the key indicator for you to make a success is buying low and selling high. So you want to buy a property that is discounted to the market. You don't want to buy something at the roof or at the top of the price cadre and then you expect to sell it higher. It's almost impossible because you're catching a falling knife. And so you want to look for opportunities of properties that are selling 30-40% below its market value. That's number 1. Number 2 is the location. Is the location ideal or suitable that categorizes your investment? I have a separate video I've done already that tells you how you can identify a key location. Single point of note is, do people in that region or that area buying property, do you have access to disposable income? What is the average household income compared to the US national average? That's a key guide that tells you if those properties are what you really, as an investor, or that location is what's key. Number 3 factor is meat in the bones. You want to buy a property that has enough meat in the bone. Why is this important? Because you don't want to go into buying the property, how fancy or exciting it might look out. You want to see, am I buying a property that has enough cash flow? Is there built-in equity in this property? Do I have opportunity of making something out of it? So you want to avoid any BTIs. By BTIs, I mean big ticket items. So items like foggy windows, roofing issues, foundation issues. You want to avoid all of those. Instead, you want to go into buying a property that will give you enough room for you to cash flow and, of course, make profit in this. Again, you want to understand the appraised value of this property. Why is this important? Because the appraised value gives you 2 things. 1, it lets you know, for example, what is the true value of this property you are trying to buy. So if the seller is putting this price up for $500,000 as a ballpark number, for example, and the previous appraised value of this property is $300,000, there's a gap here. Between the 500 and the 300, there's a $200,000 gap. That gap has to be filled. Not by you, of course. So you have to be savvy, you have to be smart, you have to understand what you're going into. Number 2 is this: the appraised value or the appraised report of a property lets you know the actual living square footage. You want to identify that to be sure that the listing of the square footage meets the actual value of what you see in the market. And why is this important? Because what you're being sold to is the living square footage. If there's a discrepancy within the actual square footage and the listing square footage, you want to understand why there's a gap in that and identify those gaps. And all of this is what we'll bring to you using InvestFusion. If you are new to hearing, to understand what InvestFusion is, it's the first AI-powered platform that collapses or combines both the multi-family units and the commercial on one umbrella. And why is this important? Because it identifies all of these key red flags I've just enumerated. It identifies the previous appraised report of the property by giving you the true valuation of the property itself, and of course, its actual living square footage. That's number one. Number two, it identifies any properties with BTI. So you want to use the AI to identify huge problems that you can avoid as an investor before going in to buy that property. Number three, it helps you identify properties that are discounted to the market. So you want to have in your fingertips access to gold mines, technically, and avoid all the landmines out there, avoid all the noise on the street. You want to put on your computer and with InvestFusion get access to properties that give you cash flow and give you built-in equity. So I hope this sounds as exciting as I am basically in utilizing InvestFusion. The good news is we are opening this door to over 30 individuals only to have access to InvestFusion. If you want to be among those 30 individuals to get your hands on this tool, comment below the word access and we'll put you on our waiting list. Until next time, thanks for watching.